Chip stocks, meanwhile, giving back some of yesterday's gains. The sector moved higher after OpenAI and Broadcom announced a custom chip deal, and Broadcom was sharply higher, but it's down today. In the last few minutes, Oracle announcing it's going to deploy 50,000 graphics processors from AMD starting in the second half of 2026. Joining us now is Stacy Rasgon, in Bernstein U.S. Semiconductor Managing Director and a senior analyst. And I don't know if you were ever wondering why'd I get into this area of finance, but God, the last couple of years, this is where it's at, Stacy. It's hard to even keep track.
It's been unbelievable. It's certainly been a ride.
I mean, it used to be. You remember memory? It used to bore you to death. I guess there were those, we used to call them field FPGAs, field programmable Gatorade, we called it, where you could pick orange.
Yeah.
You could get grape if you wanted, if you're out on the field. But they were gate arrays. Then graphics chips and CPUs, but now AI changed everything. And I don't even know. I mean, I need to go back to school to really understand it. Did you do that? Some remedial work?
Well, you know, it's my graduate work in semis is probably 20 years out of date at this point. But we've been here and there on it. Yeah.
So AMD eclipses Intel. Intel's got some government help and maybe inducing some private companies to get involved, or they're public. But I mean, it's how do you navigate it at this point? What are your favorites?
Yeah, it's been pretty wild, right? And you're right. We've got winners and losers like massively changing place, and we've got government investment, if you maybe want to call it government interference, but that's there, and a lot of crosstalk between a lot of the companies, especially in the AI ecosystem. There's a lot of cross investments and things like that where it's sort of tying them all together. They'll all sink or swim, I guess, in one piece at some point. In terms of what we like, my general call this year has mostly been own the high quality AI names and ignore most of the rest. And by and large, like that's kind of worked. Like we've liked NVIDIA, we've liked Broadcom. I still think that the AI cycle, I think we're still early. I think it's still got legs, and all of these new deals that we've been seeing announced, they actually, I think, have the effect of extending it even longer. Most of these don't even start to ship until the end of next year. So if you're worried about air pockets or digestion or anything like that, it's clearly not this year. It doesn't seem like it's next year. And if these big projects don't even start to ship until the end of next year, it's probably not 2027 either. I think we've got some runway on this still. So we still like those high quality AI names.
New companies like Grok now have an opportunity to compete with more established firms thanks to the development of AI. Grok developed a product for AI inference called the Language Processing Unit. The industry's transition from training AI models to inference is being leveraged by NVIDIA and AMD. Like the internet at the turn of the century, the artificial intelligence, AI industry is bringing about a revolution in industries. Similar to that period, new startups are emerging. Grok is one prominent example. Leaders in AI semiconductor chips, advanced micro devices, and NVIDIA are rivals of Grok. However, the startup appears to be a stimulus to increase demand rather than a threat to the market share of its more established rivals. Here's how Grok, Cerebras Systems, and other AI startups enter the competition to profit from AI and how NVIDIA and AMD stand to gain. By providing graphics processing units, GPUs, to clients like OpenAI, NVIDIA, and AMD became the industry leaders in AI. GPUs are vital pieces of hardware for artificial intelligence since they are responsible for enabling the computing capability of AI systems. Grok's Language Processing Unit, LPU, challenges the market supremacy of AMD and NVIDIA. GPUs work well for training and general AI computation. Grok's LPUs were created especially for AI inference, which is the act of evaluating information and making deductions following training of an AI. Grok's LPU does the task with remarkable speed and efficiency because it just concentrates on AI inference. Customers have been drawn in by these qualities. These days, artificial intelligence-focused businesses like OpenAI are actively working to improve AI inference. Grok is profiting from the trend. In September, it raised $750 million in funding, increasing its valuation to about $7 billion. In what ways does Grok's success benefit AMD and NVIDIA? A rising tide lifts all boats, as the phrase goes. NVIDIA and AMD can sell more chips as a result of the rise in demand for chips specifically for AI inference. AMD, for instance, used a multifaceted strategy by providing AI clients with GPUs and neural processing units, NPUs. NPUs are processors designed to mimic the processing power of the human brain. NVIDIA and AMD can increase income by offering several types of AI chips that are tailored for different jobs. As the AI sector rapidly moves from training AI models to inference, their sales are expected to increase. It's already showing that to be true. AMD and OpenAI inked a multi-year agreement in October for AMD to supply AI processing hardware. This partnership is a major step in building the compute capacity needed to realize AI's full potential, said Sam Altman, CEO of OpenAI, in describing the collaboration and how it advances artificial intelligence. As part of its agreement with OpenAI, which was reached in September, NVIDIA will provide the company that created ChatGPT with millions of AI chips. Furthermore, Grok's success demonstrates that consumers are looking for alternatives to NVIDIA, the industry leader with an estimated 94% market share. With businesses becoming more receptive to using non-NVIDIA technology, Grok's ascent may weaken NVIDIA's hold on AI chips. AMD now has a chance to solidify its place in the market. However, NVIDIA also gains from lowering the likelihood of a federal antitrust probe. Nevertheless, at this point, Grok poses no significant threat to NVIDIA or AMD's market dominance. Both can withstand Grok's threat because they have the resources to keep investing in cutting-edge AI technology. The success of Grok indicates that there is still plenty of chance to invest in NVIDIA and AMD. However, share prices have already skyrocketed due to the increase that industry veterans may anticipate in the upcoming years. The stock prices of NVIDIA and AMD both reached all-time highs on October 9th, reaching $195 and $240 respectively. The forward price-to-earnings (PE) ratio, which indicates how much investors are ready to pay for a dollar's worth of earnings based on projections for the upcoming year, indicates that both equities have high share price valuations. As the graph illustrates, AMD's PE multiple soared when the company announced a relationship with OpenAI, and it is currently significantly higher than NVIDIA's. The shares of NVIDIA are therefore more valuable. Even though both NVIDIA and AMD are expected to benefit from years of company growth from AI, NVIDIA's superior price makes it the stock to think about buying. However, NVIDIA shares are also not inexpensive, so it would be wise to wait for the stock price to drop before making a purchase. AMD may now buy up to 6 gigawatts of processing power thanks to its new cooperation with OpenAI. Additionally, OpenAI and NVIDIA have an agreement for 10 gigawatts of processing power. Following the announcement, AMD's stock is significantly more expensive than NVIDIA's. The artificial intelligence (AI) investment scene has been upended by AMD's agreement with OpenAI. The deal's conditions are special since AMD is essentially giving OpenAI chips in return for AMD shares that vest when specific milestones are met. NVIDIA's position as the industry leader in AI computer hardware may be challenged if this turns into a long-term collaboration with one of the frontrunners in the AI arms race. Nonetheless, AMD's stock has surged in the days after the announcement and has increased by more than 40% since the start of October when this video was shot. Is AMD still a wise investment after such a rise? Is NVIDIA still a better option in this case? Investors need to remember how wonderful of a bargain this is for OpenAI. Broadcom, another leader in AI computing, has signed a contract with OpenAI. Although NVIDIA's graphics processing units, GPUs, are beginning to lose ground to Broadcom's special AI accelerator chips, the two companies' deals are very different. In Broadcom's transaction, $10 billion worth of chips are actually being sold, while AMD is selling chips to OpenAI. However, OpenAI also has the chance to purchase AMD at a discount through warrants, which, should the stock do well, would partially offset the cost of the chips. When AMD realizes that OpenAI is using its chips successfully, it may encourage other AI hyperscalers to purchase them as a result of this agreement. Although it appears to be a last-ditch attempt to overtake NVIDIA, it remains to be seen if this tactic will enable AMD to rejoin the AI arms race. The agreement that OpenAI and NVIDIA made in September is one item that investors are overlooking. The relationship between NVIDIA and OpenAI was announced in that agreement, enabling OpenAI to use at least 10 gigawatts of NVIDIA processing power. NVIDIA will provide up to $100 billion to OpenAI in return. AMD's agreement, for example, is for roughly 6 gigawatts of processing power. These two transactions differ greatly from one another. In order to become an investor in AMD and spur a revival of its AI technologies, AMD is selling its processors to OpenAI. At least NVIDIA benefits from the agreement because it is investing in OpenAI in return for its chips. Given that it has all the negotiating power, I believe this tells investors all they need to know about which business is still at the forefront of AI. AMD's stock has become extremely costly following its huge increase. It currently trades for around 40 times 2026 profits, compared to less than 30 for NVIDIA's shares. The valuation of each firm may be further impacted by the fact that analysts have not yet revised their AMD predictions in light of the transaction. However, it is still a long way off, since the OpenAI arrangement isn't anticipated to see its first sales until the second half of 2026. So, is AMD currently a better investment than NVIDIA? Investors should exercise patience, in my opinion. The construction of the first gigawatt of computing power is still a year away. Furthermore, it will take time to determine whether AMD's chips are worth anything in comparison to those made by NVIDIA. Many businesses may not be as inclined to flip back and forth like OpenAI because they are experiencing great outcomes with NVIDIA technology. At the moment, NVIDIA is reporting far better results than AMD, and it still has a number of agreements with startups and AI hyperscalers. Although it's too soon to call AMD the winner of these recent transaction announcements, the company's position is getting better. Although I continue to believe that NVIDIA is the finest AI stock available, AMD is definitely worth keeping an eye on if its recent acquisition can result in significant growth. However, I believe that investors can exercise patience and purchase AMD at a far lower price in the coming months following a huge 40% or more run in the stock price. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
We have Jared Bernstein joining us in, I don't know, maybe 20 minutes, and he has an op-ed out that says he thinks it's time to call the third bubble of our century the AI bubble. He says in financial markets, a bubble occurs when the level of investment in an asset becomes persistently detached from the amount of profit that that asset could plausibly generate. Why do you think he's wrong?
Well, I mean, it's certainly a concern that people do have. I think there's a few things of and I think it really is that question on profitability. There's no question on demand right now, right? Nobody can get enough. That's the one sort of overarching theme that we're hearing from everybody in the space is demand for compute is off the charts. It's not like the tech bubble maybe where, I mean, we have dark fiber sitting in the ground today, from 2000, 2001. Fiber that was installed and never used. Everything is getting used. Like nobody's buying GPUs and sticking them on a shelf in a warehouse somewhere. Like they are all getting deployed and getting used and they can't get enough. So it really is that question on profitability and the revenue that this can drive. And yeah, I guess you could compare it. You could make the argument that the revenue will never be there. At the same time, though, it's still early in this. And you can look at other build-outs, like you can look at the build-out of AWS back in the days. That required heavy investment, and it wasn't profitable at first. And nothing's profitable when you're on the early phase of the ramp.
OpenAI says it needs at least $1 trillion to invest in data centers that provide the electricity, computing power, and storage unit, but they've only got $13 billion in profits this year, in revenues this year, not even profits.
Now. But again, we're early and we're in ramp phase. So that becomes the question, can they actually drive revenue? Is this actually going to be something that is completely ubiquitous or is it not? And I think time will tell. We'll have to see. I tend to be more on the bullish side of AI. I actually do think the demand is there. And I think there's enough, effort chasing this that we're already seeing evidence, frankly, of at least on the enterprise side of returns. Like it's early, like it's in the experimental phase. But we're seeing evidence on the enterprise side. And then on the hyperscale side, I think there's already getting returns on this. You have to remember the folks that are building this stuff out, and this is one other difference maybe from, say 2000, 2001. The companies that are doing the bulk of the spending are some of the most well-funded and most profitable businesses that humanity has ever developed. And they're not idiots, right? And they can see things that we can't. And they've also got other businesses that they're running this stuff through that they're already getting returns on. Google's getting returns on the stuff. Like Meta's getting returns.
That sounds like it's different this time, though. But some of the circular financing and some of the companies that are in these weird incestuous relationships with each other where they're each dependent on the other for. It reminds me a little bit. Remember the mergers back in the .com? You would exchange, two overpriced cats for one overpriced dog, and none of the stock was real. So none of the valuations were real. I don't know if any of that's similar, but even yesterday, Pat Gelsinger said there's no doubt we're in some type of bubble, not one that's ready to pop, and maybe. Everyone points to NVIDIA's valuation is not anywhere near stratospheric. In terms of the multiple to earnings or sales, it's not so bad.
Maybe. Look, so I'm not sure Gel's ability to speak on this, frankly, but that's neither here nor there. Like we'll
I hear you.
Okay. In terms of some of these like quote unquote circular range, look. So the biggie was NVIDIA.
If you kind of look under the surface, we already have around 56% of the stocks in the S&P 500 in the green so far. So much so that the S&P 500 equal weight is only down about 0.1% at this point in time. But the broader equity market, if you're looking at the S&P 500, still down about 1%. Obviously, we are seeing some pressure because of the news overnight that China is sanctioning a South Korean shipbuilder that basically builds ships for the United States here. And so that also then puts a little bit more tension on the equity market, and we did see a retracement for some of those gains that we had from yesterday, or that retracement of gains that we had from yesterday here. But overall, we are seeing volatility up about 21 right now when you're looking at the VIX, so we're implying more than a 1.2% move either to the upside or downside. But once again, if you kind of look at the internals, we've been seeing an improvement over the last, let's say, 15 minutes or so, where the market is starting to try to broaden out. It's just that Mag 7, those larger mega cap names, are kind of weighing on the indexes if you're looking at the S&P or if you're looking at the NASDAQ.
Okay, and obviously as we enter what is now day 14 of this U.S. government shutdown, we've obviously seen the bond market reopening, as I mentioned, on that 10-year dipping below 4. We're above that now. But what's your read on, obviously, what we're seeing as far as this flight to safety? We're also seeing gold up this morning amid the absence of the data. Obviously, a lot of Fed speak continues to be on the horizon. We're going to hear from Powell today. What are your expectations and thoughts on the reaction there?
Yeah, well, if you're kind of looking at the 10-year rate futures, we are hitting a critical area of support around that 4% level, as you mentioned. And if you kind of go back and look back in even September, we really did not stay around this level for too long. So if you're a technical trader, you are actually looking for a bouncing yields, meaning prices moving to the downside here, maybe a little bit of a backing off of that trade. And if we do not have that because of the government shutdown or economic data that's being held up right now, maybe we do see a flush to the downside when it comes to yields. But from a technical standpoint, key area of support from Powell in his commentary, obviously we're still going to be focusing on the data. We're not getting a lot when it comes to the government because of the shutdown, but they do have third-party data. I'm sure that he's probably going to reinforce the fact that they do have some insights as to what's happening with the economy, probably also signaling to the fact that if we do see a prolonged shutdown, as we are in 13 days now, it could actually have an impact when it comes to the labor market as well as consumption growth here in the United States. On the back of that, and here's the curveball, if we do see potential tariffs kind of coming back into the picture, especially for China, does that provide a little bit of uncertainty when it comes to the inflationary picture, and how do they balance out that risk? He's been talking about that a lot. So the shutdown just does not seem like it's abating anytime soon here, and hopefully we do come to a resolution, but I'm sure, once again, Chairman Powell is probably trying to calm the markets as much as possible, not create more volatility.
Yeah, and look, Neil Dutta made the point last week, which was interesting, that you don't really need the official government data to tell you that we're seeing a slowdown in the labor market. So obviously that is the area where they are emphasizing as part of that dual mandate. So let's see what they say and what Powell is going to be commenting on today. But you mentioned the tariffs, and I'm just seeing also as the IMF has been reporting on its sort of world global economic outlook, that it is very much talking. I've seen a New York Times headline suggesting that they are seeing the impact of trade tensions being limited so far, but they do expect growth to slow moving forward. So shifting gears to what we're seeing as far as crude oil, I'm just wondering what you make of it to sort of remaining below that $60 a barrel level right now.
Yeah, we saw, once again, a little bit of a bounce yesterday. I think that was probably more short covering activity. At the end of the day, the supply that's hitting the market, that is within the market right now, is pushing prices a little bit lower. And there is concern about global growth in some pockets of the market, especially when you're looking at China. China has been one of the bigger importers of oil over the last 6 to 8 months or so, but now they have pretty much topped off their reserves, and they're just not consuming as much. Now, is that going to change over the next couple of months? That could be the case, but if you're looking at it from a trader standpoint, this $57 level, $56 level is another area of major support. You could look at a potential bounce there to the upside. Maybe rig counts over the next couple of weeks go lower because of the fact that prices are going lower as well. So production, or those that are producing here in the United States, got to offset some of that price pressure, if you will, to preserve margins. But this is not really a good signal from the broader economy, if you will. Anything below $65 is kind of that cautionary note. And if we do see a further breakdown, you're starting to look at that $49 level as your next area of support.
Yeah, oh, absolutely. Certainly keeping an eye on those levels, and just sort of sticking with the commodities patch. I'm just wondering what you make of the moves we've seen in silver this week. I mean, you know, obviously we've been tracking the all-time highs. We saw a bit of a short squeeze there as well, but pulling back now from those levels, what do you make of it?
Yeah, so the physical short squeeze is still intact right now. You are seeing a lot of metal being moved from London over here to the United States. This is actually similar to what we saw back in January with gold, and we see the price action for gold continues to rise higher. That's actually happening right now for silver, and it's an industrial metal as well as a precious metal. In the industrial front, you are seeing obviously a pickup in demand. You have a lot of products, not only from the AI standpoint, but also just consumer electronics just in general, that is seeing maybe a little bit of a refresh cycle since COVID-19. So there is a structural shortage. What makes silver a little bit difficult is at these key levels like $50 or so. Do we see a pullback, a consolidation, and then a move higher? The fundamentals say silver can move higher. The price action, and for traders that trade in this space, may say, okay, let's cool off just a tad bit. So a lot of volatility. Be very careful with this trade. It's not as stable as gold. Silver's a lot more of a volatile product, and that's why some traders love it and other traders do hate it once it does reverse itself.